This next segment is a textbook example of bedfellows falling out, blaming each other for the current status of the mortgage market and the housing.
The Prime Minister has joined the chorus of criticism of the banks after 3 of the Big 4 raised their home loan rates, despite no move by the Reserve Bank. Scott Morrison says the banks don't realise how angry the public is with them. For people buying a house, not only does the rate rise mean an increase in mortgage repayments, but also the worry it could go up again at any time. Andrew Robertson reports.
Yeah, I mean, Scott Morrison, the new Prime Minister in Australia, I mean, he's got no legs to stand on. I am not trying to defend banks here, but I think our biggest problem is the government. The government's spent that much money, borrowed so much money and spent it, and pretty much, I would say, blew the money away on different projects. We didn't really see all of the value that we would have seen if that was shared and done by the private sector. I digress. So Scott Morrison is saying how borrowers and the population is angry with the banks, the big bad banks, the exact same banks that were put there by the government.
Paying his home loan is already a struggle for Mark Layton, and now he's worried it'll get even tougher.
Mine will go up nearly $100 a month. So, $1,200 a year. Given that I can't really meet that payment at the moment, it'll once again just go into credit in the hope that I can find a way out somewhere.
He's trying to get ahead as a small business owner after 2 redundancies, and the latest rate hike has dented his faith in the banks.
Given everything that's gone on with the Royal Commission, it's a pretty lousy time to do it.
The Prime Minister echoed Mark's frustration.
It seems that the banks still have a bit to learn about how angry Australian public are with them.
So the banks have the bit to learn. What about the governments? Is anyone blaming the government? The regulators that were put there by the government and that are funded by the government, who turn the blind eye to this mockery for decades. Now, it's the banks. All of a sudden, it's the banks. No, it's the dirty laundry coming out as to what the banks were doing with the blessing of the government.
The Prime Minister echoed Mark's frustration.
It seems that the banks still have a bit to learn about how angry Australian public are with them.
Decisions in which consumers feel disempowered must, by consequence, influence the level of trust.
The banks say they're putting up mortgage rates to cover the higher costs they're paying to borrow money. Since January, the 10-year US bond rate, which affects all interest rates, has risen by more than a fifth.
This is true. This is not a lie. So if you're a business, and I'm sure there'll be business owners or at least managers that manage business units in companies, if your cost rises of whatever you're selling or input materials, in this case wholesale funding, you got to pass it on to the consumer, and this is what the banks are doing. Or granted, banks have done all these wrong things which are coming out in the Royal Commission of the Financial Industry, but again, who allowed all of this to happen? I'm repeating myself, the government.
It does mean that mortgage holders in Australia are going to be impacted by what's happening globally.
It doesn't always happen that way. Fuel prices are rising, but international airfares are lower than they've been for many years. At the shops, prices are not rising despite a falling Aussie dollar pushing up the cost of imported goods. The reason is strong competition, which means putting prices up would see customers go elsewhere. However, banks wouldn't be raising their mortgage rates if they thought it would drive their customers away, which suggests that in banking, there's a lack of competition.
In the case of ANZ, which probably gets the most boost from repricing their book like this, their funding costs probably have risen around about $150 million. This latest interest rate move will probably bring them in about $300 million.
I'd love to.
Okay, so, they haven't got the competition. Again, who decided that the 4 banks were going to be the big banks that would be very hard to displace or compete with. Who decided that? Please, anyone?
See a bit more open and honesty from all the banks, small and big, in how their charges actually reflect on what I end up paying.
For Mark Layton, the struggle continues.
For more, I spoke with CLSA analyst Brian Johnson, who says he was surprised that the Commonwealth Bank and ANZ followed Westpac in hiking rates.
Well, I personally think this is the government agent, because he contradicts himself within a couple of minutes of this interview.
Brian Johnson, thank you for joining the business.
Thank you.
We've seen Westpac raise their interest rates by 14 basis points, the Commonwealth Bank by 15 and ANZ by 16. Does this just reflect their increased borrowing costs?
No.
Okay, so that's straightforward. So did the banks raise interest rates just to cover their costs? He says no, but then he says this.
What this basically reflects is, and there's a whole lot of things that move all different ways, but the first thing is we can see in Australia what's called the 90-day bank bill rate has gone up quite.
Okay, so the 90-day bank bill rate has gone up. All right, that means the cost of the banking to the banks is rising. So far, so good. He said no, but that's rising.
Dramatically. It's kind of, it went up in March, then it improved, and it's gone up, and it's subsequently improved a bit, but it certainly is well above where it was.
So it's well above where it was. So this is adding to the cost of lending money for banks.
And what it does is that triggers basically an increase in the cost of banks swapping back their overseas funding to the A dollar.
Okay, so that increases the cost for the banks. All right. But he said no. They increased it unjustly, increased the mortgage rates unjustly.
And basically that's what has basically gone up. Now, over and above that, however, banks, you might recall, repriced up interest-only loans.
Yeah, like I said, it's a government agent. Everyone's blind, and no disrespect, but I think most of my viewers will be blaming banks. There'll be a lot of comments against banks. Once again, government is not your friend. Okay, so the Prime Minister, Scott Morrison, is bagging banks. Everybody hates banks. It's very easy to hate them. And yes, they've been bad boys and girls. But this man, I think, is gone the next level. He is on the same side as Scott Morrison. All these people, don't you know, didn't you know, care about us so much.
Well, does this prove that there is a banking cartel at work in Australia when we see the banks pushing up prices in unison?
Carrington, I'm appalled that you use the word cartel.
He is appalled that he only called the banks cartel. Now, what is the government? Is the biggest monopoly in the world. There's only one government, and it changes. But at one time, there's only one government. There'll be at the moment they're Liberals, and then they might switch to Labor. But at one point in time, there's one government. There's no competition in the government. Yet this man thinks that this is not just a cartel of banks, but it's something even more sinister.
Politically correct word is oligopoly, and it's hard not to conclude that is the case. What I'd also flag, which often gets kind of lost in the messaging here, is wholesale funding costs. The cost of swaps have gone up across the book. But what's happening?
Okay, so the cost of borrowing has gone up across the book, but yeah, banks are not allowed to pass those costs to the mortgage holders somehow. The key word for this analyst is oligopoly, truly.
But the bigger implication is, I would have thought that during the Royal Commission it would be a brave bank that would increase its housing pricing, and that has now proved to be 100% correct as we see the oligopoly basically perhaps exceeding common sense. And this really does create a bit of an issue politically in Australia.
Why would the banks do this, hike interest rates, before the interim report at least is handed down?
Well, I can only guess on this. Because Westpac faced more NIM pressure than the other banks, they were looking at earnings going down next year on this year, and that's a tremendously negative signal. And so Westpac were under more pressure. But I suppose the point is that to the extent that Westpac have now repriced, you now introduce a real risk that someone increases the bank levy, be it Liberal or Labor. And if you're going to increase the bank levy, then you may as well get in and reprice up your home loans right now. And that's what I think has basically happened. Could be wrong, but that's certainly my reading of it.
All right, this is an interesting point, is that the Liberals or Labor, again, one government, whichever one it ends up being, is going to potentially increase the bank levy, which means that so the Prime Minister is saying, the public is angry because you're increasing the interest rates. Now, what do you think is going to happen when whichever government gets in power increases the bank levy? Is this going to increase or decrease the mortgage rates? Will the banks have to increase or decrease the mortgage rates? Increase the mortgage rates, right? So instead, that money is going to be funneled through the bank. The bank's going to make more money, but then the cream is going to be taken off the top by the government. So people will end up paying more for their mortgages. Banks will have more in their pockets, but then that'll be reduced by this increased levy. So the government have to get their cut, but they're going to continue to blame banks. Because another point, honestly, how did people think, the borrowers, the mortgage holders, that these interest rates are going to stay close to zero, very low single digits on the retail level, so 3.65, say 4%, even 5%? This is unheard of. How did anyone think that this can stay forever and get themselves into so much debt? So, I'm sorry, banks have done the wrong things. Governments, don't get me started on it again. But the people, why did you borrow $1 million? Why did you borrow $800,000? Of course it's going to go up. They're the lowest interest rates in 5,000 years.
Then domestically, we have fears around sort of the stagnant wage growth, as well the low inflationary environment, flat retail sales, and the sliding housing market. So I think this has all come to a head, and we're seeing that play out in the ASX this week. We're seeing a lot of profit taking. I think also it's important for investors to remember that September is historically...
Couple of quick disclaimers. I don't work for the banks because I seem to be quote unquote protecting them, and I certainly don't work for the government, or I'm not working for any other government. Thank you very much. This is an interesting piece.
How Westpac's $35 million settlement over lax lending could open a flood of litigation from customers.
And obviously this is not a financial advice, this is just my opinion. So this little clip just told us that this, lending practices by banks, or in this case Westpac, may open the floodgates of the litigation. Again, that's another reason why not to buy bank shares. They're not going to go down out of business. Their share price will go down eventually, because it's the bank bashing time. It's very popular to be bashing banks, especially from the government who put him there.
Westpac's $35 million penalty from ASIC for breaching responsible lending laws might be just the tip of the iceberg. Westpac breached the law with 10,000 loans, but thousands more may now be in question. The admission of guilt could open the door to legal action from customers. With rates on the rise and an increasing risk of defaults, Stephen Long reports.
It was a big omission and a big admission. Westpac conceding in a $35 million settlement with ASIC that it breached responsible lending laws, which paves the way for future litigation.
These admissions expose Westpac to civil action by individuals who were provided with too much credit, and inappropriately so, during their application for a loan.
The question is, what might happen when interest rates start to go up and borrowers are hit with a double whammy of rising repayments and falling property prices? Bank customers aren't the only ones who might be aggrieved.
There's also the argument on the liability side of the bank's balance sheets, and that's the international wholesale lending community, who gave these banks a lot more money than they probably would have had they have known that the banks did not have these controls in place.
Lindsay David has been arguing for years there is widespread fraud and manipulation in mortgage lending. He says Westpac